Hi everyone, this is Victor here. In this Tesla stock analysis video, I'm going to talk about whether Tesla will reach 4 trillion in market value over the next 5 to 10 years. Before I start, I want to give you some context first. At the time of making this video, Tesla stock is near a 1-year low. It has a market cap of 700 billion. In the most recent earnings, Elon Musk predicted that Tesla has the potential to be worth as much as Apple and Saudi Aramco combined, or around 4 trillion in market value. Elon Musk said this in a recent earnings call.
I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. So now that doesn't mean it will happen or that it'll be easy. In fact, I think it will be very difficult. It will require a lot of work, some very creative new products, tremendous expansion, and always and less. But for the first time, I see a way for Tesla to be, let's say, roughly twice the value of Saudi Aramco. This is the first time I'm seeing that potential.
So in this video, I will discuss these topics to see if Tesla will actually reach 4 trillion market value over the next 5 to 10 years. First, what are the positives and the negatives of Tesla's recent earnings? Second, will Tesla reach 4 trillion in market value by 2030? And third, Tesla stock valuation. You'll learn about how to calculate Tesla stock's current intrinsic value per share, so you will know when Tesla stock becomes overvalued, fairly valued, or undervalued. If you like this video, make sure to hit the like button, subscribe, and turn on the notification button. I will continue to make many excellent investing videos a week that will help you become a great investor. Also, if you like this channel and want to support it, check out my Patreon blog in the video description and become a premium member. Our goal is to create the best intelligent investor community that will help all our members grow their stock portfolios to over 7 figures over time. With your support, we'll be able to stay independent and create many excellent stock analysis and investing videos a week that will help you become a great investor. The link is in the video description. Take a look, let's start. So what are the positives in Tesla's recent earnings? Tesla's free cash flow reached another record high even in this high inflation market, mainly because Tesla's vehicle delivery grew 42% year over year. Tesla's free cash flow was 3.3 billion in Q3. In the trailing 12 months, its free cash flow was 8.9 billion. If you look at this here, you can see Tesla's operating cash flow and free cash flow had been growing consistently for many quarters, mainly because of Tesla's high vehicle delivery growth every quarter. In Q3, Tesla had grown its cash equivalents and marketable securities by 2.2 billion to around 21 billion. This is very important because 21 billion cash is a very large war chest. It's comparable to Mercedes-Benz, BMW, and GM's war chest. 21 billion of cash equivalents will let Tesla invest in more new projects and expand its gigafactory capacities without relying too much on external financing such as debts and more shares. Tesla currently has one of the highest operating margins in the auto industry. For example, Tesla's operating margin was 17% in Q3. Going forward, we can expect Tesla's operating margin will improve over time because Tesla's Berlin and Texas gigafactories operation efficiencies will improve over time as they continue to ramp up production. Also, according to the latest earnings call, Tesla's 4680 battery production is growing rapidly, so the cost efficiency and production rate of 4680 battery cells will continue to improve over time. In Q3, Tesla's total production grew 54% year over year. In comparison, its vehicle delivery grew 42% year over year, which in my opinion is still a very strong growth in this high inflation market. You can see there was a large gap between Tesla's total production growth and vehicle delivery growth. The main reason is this. According to Elon Musk, many vehicle deliveries were still in transit because there were not enough boats, trains, and car couriers to deliver all the vehicles to customers at the end of the quarter. Normally, Tesla has the largest delivery volume, usually in the last few weeks of every quarter. Now, Tesla decided to smooth out deliveries throughout the quarter instead of having a very high delivery volume at the end of every quarter. The main reason is that it has become very expensive and hard for Tesla to have enough transportation capacity to deliver a large volume of vehicles at the end of every quarter. Tesla earns the most revenue from selling EVs, specifically Model 3 and Model Y, because they are still affordable for many consumers. If you look at the financials here, you can see that 87% of Tesla's total revenues came from selling EVs. Model 3 and Model Y contributed the most revenue growth for Tesla. Tesla's energy and storage business and services are becoming more profitable now. In the latest quarter here, you can see Tesla's energy and storage business and services had positive gross margins. This is a good sign because these businesses and services used to have negative gross margins. According to the latest earnings here, Tesla's Fremont, Shanghai, Berlin, and Texas gigafactories already have a combined installed annual vehicle capacity of 1.9 million. In the most recent Tesla annual general meeting, Elon Musk said we're aiming to achieve a 2 million vehicle run rate by the end of the year. In terms of future products, Tesla is expected to deliver the first Tesla semi-trucks to Pepsi in December 2022. Tesla has delayed Cybertruck many times already. Now Tesla expects that it will begin early production of Cybertruck in the middle of 2023. Here's the important part that I believe will help Tesla produce 20 million vehicles a year by 2030. Tesla is currently working on a smaller vehicle that's much cheaper than the Model 3 and Model Y. Elon Musk said this.
We don't talk exact dates, but this is the primary focus of our new vehicle development team. At this point, we've done the engineering for Cybertruck and for Semi, and obviously you can guess what we're working on, which is the next generation vehicle, which will be probably about half the cost of the 3Y platform. It'll be smaller, to be fair. I think shortly exceed the production of all our other vehicles combined.
Yeah, I mean, obviously, we're going to take everything we learned from SX, 3Y, Cybertruck, and Semi and pour it into that platform, but we're on a 2-for-1 target, so trying to get to that 50% number again. It's like, what would it take how do we make 2 cars for the amount of effort that it currently takes us to make one Model 3?
Here are the negatives in Tesla's recent earnings. In Q3, Tesla's vehicle delivery grew 42% year over year. This is below many analysts' expectations, and it's below Tesla's 50% average annual vehicle growth target. For many investors and Wall Street analysts, the biggest concern is that the demand for Tesla Model 3 and Model Y will likely be slowing down in the upcoming quarters because of high inflation, high borrowing costs, and economic downturn in the US, Europe, and China, and increasing competition with other EV makers such as BYD and Volkswagen Group. At the time of making this video, Tesla's 2 biggest competitors are BYD and Volkswagen Group. According to this article here, you can see Tesla sold the most EVs in Q3, but BYD's EV sales grew at a much faster pace than Tesla's. BYD is one of the largest battery makers in China. This is a huge competitive advantage over Tesla and other EV makers. Tesla is aiming to achieve a 50% average annual growth rate in vehicle deliveries over a multi-year horizon. However, in a recent earnings call, Tesla will likely miss its 50% annual vehicle delivery growth target in 2022. This means Tesla will likely deliver slightly below 1.4 million vehicles in 2022, but total production should still be around 1.4 million vehicles in 2022. Right before making this video, Tesla decided to lower Model 3 and Model Y prices in China. I believe this is because China's economy has slowed down a lot in recent quarters, and there's a lot more competition in China. In my opinion, Tesla will likely need to lower prices in China to compete with other Chinese EV makers that sell much cheaper EVs. Tesla has other headwinds. Most of them are macro headwinds that are outside of Tesla's control. For example, these headwinds include high inflation, higher raw material costs, higher commodity prices, higher logistics and transportation costs, supply chain bottlenecks, high US dollar, operation inefficiencies in Texas and Berlin gigafactories, and high costs to run production of 4680 battery cells. Obviously, all these headwinds will continue to affect Tesla's gross margin and operating margin going forward. Here's the important question. Will Tesla reach 4 trillion in market value over the next 5 to 10 years? I will share with you Elon Musk's prediction first, then I will share with you my own prediction. Tesla said that battery supply constraints will be the biggest limiting factor that will determine EV market growth in the medium and long terms. In other words, Tesla will need a lot more batteries going forward if Tesla wants to reach its long-term goal to make 20 million vehicles a year by 2030. In a recent annual meeting, Elon Musk said this.
Well, I think ultimately we'll end up building, I don't know, probably at least 10 or 12 gigafactories, and there will be really gigafactories, like average output of 1.5 to 2 million units per factory, which is enormous. So.
In comparison, Toyota sold 10.5 million vehicles in 2021, and Volkswagen Group sold 8.6 million vehicles in 2021. Tesla is aiming to double Toyota's annual vehicle delivery or production by 2030. Here's Elon Musk's prediction. He said,
So in conclusion, while the market themes revolve around the short term, it's very important to focus on the long term. I can't emphasize this enough with investors, and I think long-time investors obviously recognize this with Tesla. You have your sort of local ups and downs, but the long-term trend has been extremely good. And several years ago, I said, I think on an earnings call, I thought it was possible for Tesla to be worth more than Apple, which was then the highest stock market cap company, I think, in the market. And Apple at the time, I think, was around $700 billion. And I said it required incredible execution, at least some luck, and we didn't indeed achieve that. And now I'm of the opinion that we can far exceed Apple's current market cap. In fact, I see a potential path for Tesla to be worth more than Apple and Saudi Aramco combined. So now that doesn't mean it will happen or that it'll be easy. In fact, I think it will be very difficult. It will require a lot of work, some very creative new products, tremendous expansion, and always some luck. But for the first time, I see a way for Tesla to be, let's say, roughly twice the value of Saudi Aramco. I mean, this is the first time I'm seeing that potential.
Here's my long-term prediction. I'll show you my spreadsheet here. Tesla is expected to produce about 1.4 million vehicles in 2022. Tesla's long-term goal is to produce 20 million vehicles a year by 2030. If Tesla can achieve this long-term goal by 2030 or later, then I believe Tesla will reach 4 trillion in market value. Tesla's management expects that Tesla can achieve 50% average annual vehicle delivery growth over a multi-year horizon. So I'm assuming Tesla's vehicle delivery and production will grow about 50% each year over these 3 years. After that, I expect Tesla's annual growth will slow down to about 40% each year, and then slow down to about 30% each year. If Tesla can achieve these growth rates, then Tesla will have a good chance of producing about 19 million vehicles a year by 2030. Obviously, this is very hard to achieve. Tesla will need to have excellent execution between now and 2030. According to Elon Musk, for Tesla to produce 20 million vehicles a year, Tesla will need to have at least 10 or 12 gigafactories. Each gigafactory will need to produce about 1.5 million to 2 million vehicles a year. In addition to the Model 3 and Model Y, Tesla will need to mass produce the Cybertruck in the upcoming quarters and make it as affordable as possible. Tesla will need to introduce a more affordable EV that will be smaller and cheaper than the Model 3. For example, I believe this new Tesla EV will likely be a hatchback that will be cheaper than the Model 3, so it will be affordable for mass consumers. At the time of making this video, Tesla's full self-driving FSD software is not fully released to the public yet. Tesla also has other products such as the upcoming semi-truck, the Tesla Roadster, and the Tesla's Optimus Spot. Again, it's too early to tell how much these more expensive products will contribute to Tesla's future revenue and profit growth. I want to show you how to calculate Tesla's intrinsic value here, so you know whether Tesla stock is overvalued, fairly valued, or undervalued now. If you want this calculator, you can download it from my Patreon blog in the video description. These are the key assumptions in this calculator. First, I define Tesla's intrinsic value as its future free cash flows discounted to the present day. The discount rate is 11%. You can use a higher discount rate here if you want to be more conservative. Tesla's most recent 12 months of free cash flow is 9 billion. Based on the long-term growth estimates I talked about earlier, I believe Tesla's free cash flow growth will eventually slow down from 50% to around 25% to 35% over the next 5 years. Let's go over these 3 case scenarios here: worst case, normal case, and best case scenarios. Under the worst case scenario, we're assuming Tesla's future free cash flow will slow down from 50% annual growth to around 25% annual growth over the next 5 years. If we forecast Tesla's free cash flow over the next 5 years and discount the free cash flow to the present day, Tesla's intrinsic value should be around 610 billion for the entire company, or $176 per share. I'm giving this scenario a 25% probability here. Under the normal case scenario, we're assuming Tesla's future free cash flow will slow down from 50% annual growth to around 35% annual growth over the next 5 years. Then Tesla's intrinsic value should be around 776 billion for the entire company, or $224 per share. I'm giving this scenario a 50% probability here. Under the best case scenario, we're assuming Tesla's free cash flow will grow at a compound annual growth rate CAGR of 50% over the next 5 years. Then Tesla's intrinsic value should be around 1 trillion for the entire company, or $300 per share. I'm giving this scenario a 25% probability here. If we add all these numbers here, Tesla's intrinsic value should be around $231 per share. In comparison, Morningstar estimated Tesla's intrinsic value to be around $250 per share. This means I believe Tesla is likely undervalued or fairly valued at the time of making this video. Personally, I already have Tesla in one of my gold stock portfolios here. I'm planning to buy more Tesla shares for long-term holding once it is at least 10% below my intrinsic value estimate, because I want to have a better margin of safety to reduce risk. Now, all these are only my opinions and my analysis based on my research. They are not financial wise. There are always risks associated with investing. You will need to do your own research and do your extra due diligence first before investing in anything. Thank you for watching this video and supporting our channel. This is Victor from the Intelligent Investor channel, and I will see you in the next video.